Welcome to today's market report.
European stock markets traded in a muted fashion on Tuesday ahead of key US inflation numbers, with the UK underperforming after the release of patchy growth data. DAX in Germany traded 0.3% higher, CAC 40 rose 0.3%, FTSE 100 dropped 0.2%. Britain's economy grew by 0.4% in February from January as companies prepared for the lifting of a third coronavirus lockdown, below the expected growth of 0.6%. Britain's economy shrank by almost 10% last year, its biggest slump in more than 3 centuries, and a more severe fall than in most European economies, as the country's huge services sector was battered by the coronavirus pandemic. The UK numbers followed robust trade data out of China, which were boosted by weak comparative numbers from a year ago. Chinese exports grew 30.6% year-on-year in March, while import growth surged to the highest level in 4 years, jumping 38.1% year-on-year last month. The closely watched German Zoo economic sentiment release is due later on Tuesday, but most eyes will be on the release of the US Consumer Price Index for March in the afternoon. This is expected to show inflation increasing by 0.5% on the month, or 2.5% year-over-year, up from 1.7% in February. Federal Reserve officials have said repeatedly that they are prepared to look through periods of inflation climbing above its 2% threshold without changing their accommodative policy stance, as they can see these episodes as being temporary in nature. However, the last time an annual headline CPI number was at 2.5% was in January 2020, before the COVID pandemic, and a figure significantly above this will certainly put the pressure on the Fed. In corporate news, Givaudan stock rose 2.9% after the Swiss company confirmed its mid-term targets after like-for-like sales rose 7.7% in the first quarter, helped by strong demand for its fragrance and beauty products. Dustin stock rose 5.7% after the Swedish IT solution provider said it would buy software developer Centralpoint for €425 million. Hays stock rose 3.6% after the UK recruitment firm said it expects to beat market forecasts for its 2021 opening profit on the back of a strong third quarter, while JD Sports stock rose 0.6% after the retailer released a positive outlook. Oil prices edged higher, helped by the robust Chinese trade data, indicating continued economic recovery in the world's largest crude importer. US crude futures traded 0.6% higher at $60.05 per barrel. Brent contract rose 0.7% to $63.69 per barrel. Gold futures fell 0.3% to $1,726.95 per ounce. On the FX front, the GBP/USD keeps its recovery mode intact, around 137.35 on the UK growth numbers. The spot trades almost unchanged on the day. The UK GDP monthly release showed that the economy expanded less than expected in February, arriving at 0.4% versus 0.6% expectations and minus 2.9% previous. The next Scottish parliamentary election is coming up on 6th of May in just over 3 weeks. So far, at least, the FX market has been content to ignore potential risks of Scotland's upcoming election, with investors still focused on the pandemic recovery. Economists think sentiment has grown more resilient against these shocks. That can change quickly, however, if the underlying political dynamic begins to shift in the final days of the campaign. Bank of England MPC announced on Tuesday that Chief Economist Andy Haldane will quit his position and step down from the Monetary Policy Committee after June's meeting. The British pound weakened modestly against its major rivals after this headline, trading at 137.07 against the dollar, losing 0.25% on daily basis. Euro-dollar remains apathetic in the 119 neighborhood. The pair gyrates around the 119 hurdle following earlier lows in the proximity of 118.80 amidst the generalized inconclusive price action surrounding spot as well as the absence of catalysts. The dollar index was up 0.1% at 92.21, only marginally higher than Thursday's low of 91.995. Dollar yen rose 0.2% at 109.59. Aussie dollar fell 0.2% to 0.76. The gains for the dollar has been limited ahead of the inflation data.
This is today's market news. Thanks for listening. We'll see you next time.